Good afternoon, traders. Happy Tuesday. Just going to be checking the audio very quickly to make sure that we're good to go. And then we're going to get started. The audio very quickly. We're good. So today's topic is going to be the opening range breakout. We're going to talk about how to use it properly and the when not to also. So it's important to know when to use something, but when not to use something also. So the opening range breakout is, I'm going to illustrate it through SPY. Thanks, B. Gotti. Thank you for letting me know about the audio. Appreciate that. So essentially, we need to know when to use strategies, when not to use them, and we should have some back-tested data to support what we do, right? At the end of the day, if we trade setups that we don't know what the results are, or we don't have back-tested data, then we're pretty much gambling at that point, right? So what I'm going to do here too is let me just retweet this and just let everybody know that we're live here. Live now. Please join if you can. Okay, so let's see if we can get that. All right. So we got 9 people in here, so welcome. So I'm going to be talking about the opening range breakout today, and I'm going to use SPY to illustrate it and why, when I use it, when I don't use it. So first of all, the opening range breakout strategy is not a strategy that should be used every single day when you're trading the same stock, okay? The opening range breakout needs to be used when we can identify either trap bulls or trap bears, okay? So whenever we see that there are traders that are trapped, then we can use the opening range breakout. And the whole purpose behind doing that is we want to use it so that we can take advantage of the trapped traders when their stop losses get run. When the panic happens, we want to be able to be a part of that momentum, okay? All right. So my process is very simple. The first thing that we want to do whenever we're using the opening range breakout is, first of all, we have to pick our time frame. So you can do an opening range breakout on the 15-minute chart or the 5-minute or the 3-minute, even the 1-minute. You can go as low as you want. Personally, for me, I like using the 5-minute chart more. I have more back-tested data around the 5-minute chart, so I'm more confident. And also, it's not that fast and it's not that slow of a time frame, so it'll allow me to execute appropriately. Okay, so back here to the plan, what we need to do first is we need to draw the previous day's low and the previous day's high. So I have that drawn right here for you guys, the previous day's low and the previous day's high. So this was Monday's price action, okay? And then on Tuesday, which is today, we open significantly lower than the previous day's low, okay? So we're gapping down outside of the range. And whenever we gap down outside of the range, there are going to be long traders, bull traders that are going to be trapped. And we can clearly see it through the chart here, right? If we look at the chart here, we can see there were bulls. Okay, so let's look at this in detail. Let's look at Monday. So there were bulls that bought here around 418. They bought multiple times, right? And they were building a position. And even into the close, there was buying. See, you see this candle here? A big hammer bar into the close, so there was buying. So a lot of people that were bulls on Monday expected us to continue to gap up and go higher. But instead, when we gap down, we have a severe situation, okay? So gapping down, anybody that went long here is instantly losing money. And because they're instantly losing money, we want to take advantage of that because they're going to have to take a stop loss. Okay, so when they take that stop loss, we want to come in and we want to take that for a scalp and for a day trade. Okay, so does that make sense, guys? Let me know if that makes sense. So there's 2 ways to trade it. There's actually an opening range breakout strategy in Tradingview that's free. Okay, that it draws the lines for you. Okay, and what you want to do is you want to make sure you go here and you want to edit it, okay, for the length of the opening range, okay? So you want to go here and you want to go to 5 minutes. So that's the one I use. You can use any one, but that's what I use, okay? I'm so sorry about the coughing, guys. Still trying to deal with this. So anyways, so if we look, okay, so for those of you who want to use the indicator is free. Let me get rid of these lines here. We can see here that the yellow, you see these yellow dots, it's highlighting the opening range for you, okay? And these secondary lines here, it's even giving you profit targets, right? So I like this tool because it's free and it's pretty cool because it even gives you targets, right? So simply here, the first 5-minute bar, the high is 416.59 and the low is 415.75. So what we're doing with the opening range breakout is we're waiting for either the high or the low to break, and then we're going to take the position in that direction. So if we break through the low, we're going to short, okay? And specifically in this scenario, when we gap down like this, we want to actually be short, okay? We want to take advantage of any bulls that were trapped, because when they stops get run, we get a flush. You see this here? This is a stop run. This is a flush. So what happens is so let's say you're a bull over here, right? So maybe if you didn't take a stop loss right away, you wait for the first 5-minute bar to close, you put your stop loss below the low of the first 5-minute bar. As soon as it gets hit, bam, we have a flush, we flush straight down. All right. So from a risk to reward perspective, you want to just short right here. You can put your stop either above the high of the candle, or you can go a little bit tighter, right? You can come through halfway, 618, any one of those levels are fine. Okay. And then what you want to do from there is you want to just scale out in risk in increments. Okay. So here's 1 to 1, here's 1.5, 2, 2.5, so on and so forth. We get all the way down to about 5 times your money today. So that's an exceptional trade. So you can take that trade right in the morning, first 5 minutes, lock in your profits, and just be done. How simple is that? We don't have to make things complicated. We can just keep it very, very simple. So if you risk $1,000 risk on this trade, then you could have made $5,000. I have a friend that traded puts today. So just taking puts right here on the breakdown, that's easily triple your money at the lows here. Okay. Depending on the expiry. If you got closer expiry, you would have made a lot more. All right. So that's the opening range breakout using the indicator here, right? So I don't use the indicator because I don't need to, because I can see it like just with my, just looking at the chart, I can see it, right? So basically to summarize, we want to use the opening range breakout when we have a significant gap and either the bears or the bulls are trapped at the open. Okay. And then from there, we want to take the breakout of the first 5-minute bar, or we can go to the 15-minute bar. Okay. So let me show you how you would do that on the 15-minute chart. So for some of you, you might prefer to trade on the 15-minute chart because it might be a little bit slower for you. And it might be easier, right? I know when I first started trading, I used the 15-minute chart because I was not comfortable with the 5-minute. It was too fast for me. But nowadays, the 5-minute chart feels like an eternity. Okay, so we're gonna go in here again. We're gonna hit edit here, and we're gonna go here, and we're gonna go 15-minute chart. We're gonna press OK. So now it's highlighting the 15-minute range. You see this bar and this bar. These two yellow dots are telling you the range. So by just following the indicator, we would just short on the next bar here, and then the first target is here, and the second target is here. So it's actually just even giving you the targets as well. So it's a really awesome indicator. You guys should try it out. Okay. So then we can also do the same thing on the hourly chart, right? So if we go to the hourly, we could do the opening range breakout of the first hour bar and just take this down for a little scalp. We could do the same thing with the 30-minute chart. So let's find that, right? Just take that down. And we can also do the same thing if we want to scalp. We can go to 1-minute chart. Like if we really, really want to scalp and we're really, really quick, we can go 1-minute chart. Let's see what happened with the 1-minute chart. So here's the 1-minute chart. First minute breakout, you could have got 1 to 1 there. So you could have still made some money and then it flushes down, right? So personally for me, I like to play the opening range in the direction of the gap down, like the gap. So if we're gapping down, I want to short. If we're gapping up, I want to go long, but I'm still open to playing both directions always, because there's going to be momentum. And my purpose of trading this strategy is to try to capture the momentum. Okay. So let's see if I don't really have anything other strategies prepared, but I want to tell you guys when not to use it. Okay. So let's see, let's go back in time. Okay, so here's an example over here. Okay, so if we look at this chart, so this open, and I take the high of the previous day and the low, which is down here. Anytime we open inside of the previous range like this, you see how we're opening inside, we're not gapping up above or we're not gapping below. Then what this is called an inside open, and it's a neutral open because we pretty much haven't made any significant move. And because of that, the opening range breakout usually doesn't work because there's not a lot of momentum. Momentum comes from gapping above the high, gapping below the low. That creates momentum in the market. And with that momentum, the opening range breakout and momentum strategies will work very well. But if we're opening in the previous day's range, we're not expecting momentum. And you can see here, if you take the opening range breakout, we pop up a little bit and then we reverse and you get stopped out, right? So you need to know when to use it. And that's what I'm trying to teach you guys. Make sure you're using it when you can clearly see that somebody's trapped. Here's another great example of opening range breakout, when to use it right here, okay? So let's draw the previous day's high, which was here, and the previous day's low. So we can see that this was the Fed day, right? And then the next day we gap up significantly, and we can see here that what's going on here, okay? So we can see that we were building a base. Look at this base. Multiple times we were buying. And then eventually when we get up here, the bulls have made so much money that we have a very crazy profit-taking slurge, right? So this is a profit-taking slurge. This is why we crash, because all the bulls were loading up from here. And then when we have that big gap up, that's a time where big institutions take profit. And that's why we have this drop down. So just taking the opening range breakout here, right? We would short right here at 419.93. We would short right here, keep our stop up here, and that's easy money. So let's see how that would play out. Hey, Jeff, welcome. Matthew, welcome. Damon, welcome. Right, so if we go right here, we short this bad boy right there. Let's say we put our stop right on the 618, right around here. And then we just take this bad boy down. We can walk this down. We could scale out on the way down. That's almost 7 times your money right there. So if you risk $1,000, you can make 7,000 here. So that's the risk to reward principle. Okay, so this is what I mean when we're looking for opening range breakout. We want to look for something that's gapping. Okay, something that's gapping. So the gap is when we want to use that. Hey, Andrea, welcome. So let's see. Let me just put in some tickers here. Let's look at AMD. Okay, here's a good example. So here's AMD on the 28th of April. You can see that we're clearly gapping above the previous day's high. And because we're gapping above the previous day's high, the opening range breakout is a great place to take a trade. So we're just going to short right here, keep our stop somewhere here, and that's easy walking it down, right? But do you guys see with the opening range breakout, I'm not taking, like if I don't see a big gap in the chart, I'm not going to take it. Even though sometimes it's going to work, that's not the point. The point is we want to take it when the odds are on our side, okay? So for example, here, you could see that we closed here on the 16th of April, and then on the 19th, we opened pretty much where we closed. The opening range breakout has a little pop, and then it reverses. This is what you typically see in a inside day. When we open inside of the range, you typically see a lot of reversals. So that's why the opening range breakout is not a good strategy for those days. All right. So what else do we have? Let's look at the Qs. And here's a good example, right? We're gapping up above. Take a short on the opening range breakout. That's beautiful, right? These, I wouldn't take these. Here is a nice gap down, which is today. Again, same strategy, right? Taking the breakdown right here of the low and then taking that down. Alex says, how big of a, let me put this on here. How big of a gap do you look for? Do you base it off certain percentage level? So Alex, what I look for is I look for the previous day's high and the previous day's low. So as today, for example, right? The previous day's low is over here. So gapping down below the previous day's low is always going to be significant because anybody that had a stop at the previous day's low is in trouble because we're gapping below their stop loss and there can be a lot of momentum and a lot of selling. So I always use the previous day's high and low as my trigger. And that's pretty much what I do. So hope that one makes sense. All right, so if you guys are interested for more on the opening range breakout, I have a full video on my YouTube, full free strategy for you guys. I want to show you guys that it works, right? Like, look, today you could have made a good bit of money here just taking that opening range breakout short. And then something else that I wanted to point out was on SPY and on the Qs, we had a beautiful inside bar as well. Okay, so we have the inside bar. So the inside bar is also another clue. Right? Hi, Rizwan. Hey, Matt, I'll get to your question in a sec. So the inside bar is another clue because what it means is that we're consolidating for 5 minutes straight. So picture this in your head. We had a lot of selling and then we just paused. Okay, so what's likely to happen next? Continuation of the sell. Okay, because if the bulls were going to change this market, they would have broken through the high of the first 5 minute range. They would have turned around, but they didn't. So if you didn't take the opening range breakout, you could have just taken this inside bar here. And if you played this inside bar correctly, let's mark it up together. It's actually one of the best inside bars I've seen in a long time because we take this down here. Look at that, almost 8 times your money. So if you risk $1,000 on this inside bar, that's $8,000 in profit. So absolutely beautiful. All right. So opening range breakout, inside bars. And then fibs also, guys. Fibs are also very powerful. We go to SPY. Let me just draw the fib for you guys, and then we'll get to the questions. And if you have chart requests, start posting them now also, guys. Okay, so here's SPY. So first trade, opening range breakout. Second trade, inside bar short. Third trade, take the Fibonacci from the high to the low. And this is called what? This is called the morning leg from my book. Okay, this is the morning leg. And then what do we have? We have double rejection at the 382. We have inverted hammer as well as this big bearish bar. We just take this down. That's easy, double your money right there. All right. And then if you noticed, what I like to do always, guys, is I always like to use the Fibonacci extensions. And you can see we double bottomed at the 272, right? We made one low and then another low. We double bottomed at the 272. And then we traded all the way back up, basically to almost where we opened. So this is also one of my free strategies called the reversal strategies. Okay. All right, great. Do you have any tips on what clues to look for if it fails? If it fails, you're going to get stopped out. There's nothing you can really do about it. With the opening range breakout, you take it, and if you get stopped out, it's okay. Because you can see, right, when you're right, you can make, a lot. You can make between 2 to 5 times your money. So you just have to play the odds game, right? If it's wrong, you take your stop loss and you come back another day. That's just how trading is. All right. So we have some chart requests. So let's do that. Rizwan says ticker ATVI. So for ATVI, if we go to the weekly chart, let's go to the monthly chart actually. So with ATVI, we closed the monthly chart, right? Let's zoom out a little bit. So obviously the stock is very bullish. It made new all-time highs, but we closed the monthly chart with this inverted hammer here. You see that? We had this inverted hammer, and that's why we're having some selling right now. So this is just the selling that we're having right now. It's just a continuation of this inverted hammer. I had an order to get in at 98.13 if it broke through 98.13, but you can see it never actually came back up there. So that's why I use stop limit orders, because now I understand that ATVI doesn't have momentum as of right now. So I'm going to cancel my order. Likely at the end of the week, I'll cancel my order. So if we just look at the chart though, this previous all-time high area here, 83.30s, is going to be a nice little area for us to come and retest and potentially be the new low, because anytime we break out, the market likes to retest those highs always. So that's what I'll be looking for over there. Matthew says J&J. So J&J, we took this trade today and we hit targets in the private swing room. So right here, guys, this was the setup in Johnson & Johnson that we took on the weekly chart. The entry was 165.36. The stop was 163.06. The first target went out at 1-to-1. We hit profits targets right away today. So it was very, very profitable trade for us on Johnson & Johnson. I'm very, very happy with the performance. And then we're going to be looking for next targets, which I have already marked here at the 1.25. So let's go to private room. Let's go to private room. And let me just show you guys how I do it. Okay, so we're going to go to private room here. So on April 30th, okay, so this was Friday. So this is how the chart looked to me at the time on Friday, like this. So what I was looking for here with Johnson & Johnson is, okay, I see a long wick here. I see a few long wicks here. So I know there's shorts in the game. So what I'm trying to do is I'm trying to find a place to get in to squeeze those stop losses, right? So what I did here is I just said, okay, I'll take the breakout of this inside bar and I'll take it up and see where it can go. And that's exactly what happened. We broke the inside bar and we started squeezing these stop losses all along the line here. And I was able to hit my target. So I gave this to everybody on Friday, exact entry stop, first target. And then today we hit the targets right here, okay? So that's how I do it, guys. No bullshit. Trying to help people try to get another stream of income in their life. The more income streams you have, the better off you're going to be in the long run. You never know when your job is going to implode. Look what happened with COVID. So you need to be financially free by having multiple streams of income. So that's one of the biggest secrets in the world. Have multiple streams of income. So Cleveland Cliffs looks good. Looks like it's going to break all-time highs. It definitely looks like it's on the way. As long as this level holds here, 1760, I think it'll break through all-time highs. So it looks pretty good for that continuation. Cat. Yeah, so Caterpillar here is, if we look at this, we're just hovering near the all-time highs. What I like about Caterpillar here is that it put in this hammer. So I want to see it follow through and break through the last week's high. I want to see a follow through, and then I'll definitely be looking to play that long. Caterpillar is a very bullish stock. AON looks good again, new all-time highs. Looks pretty solid. As long as this level can hold 231.70, continue higher. VLO from Jeff. So seeing a lot of Fibonacci action here on VLO. If I take the short from this swing high to this low, I could see that we found a little bit of rejection near the 786, but we did get bought up pretty quickly. And this long right now is also sitting on a Fibonacci. This most recent leg from low to high, we can see it right here. It's been sitting on the 50 and just building a base. So for this bullish momentum to continue, 71 needs to hold. And if we can break through here, we can definitely come back and retest the $100 level. Asif says ABBV. Okay. So we had the inside bar 2 weeks ago. Oh, this is a 2-week chart. That's like 1 month ago. We had the inside bar back on the 12th of April that week. This one was a beautiful winner. So hopefully you took the breakout of this inside bar up and then you made some good money. Right now, there's going to be a lot of resistance here because look what happened previously in this area. We had a major sell-off. So it's not going to go without a fight. This area is going to be resistant. So if I were trading this, I would have been long from the 108.30 level. I would have taken that up. I would have locked in some profits and then just let it go from here because you don't know what can happen next. B. Gotti, do you use supply and demand with your inside bar? Yeah, I use volume. I use volume. I combine the inside bars with volume, and that's how I trade them. Rizwan said ATV had great earnings in 94 and some change. Great. That's great. So let's see how it closes this week and put together a plan on it. Okay. And then next one, Alex says Nike. So Nike, I took a loser on it this week. So here was my trade. So we had the inside bar on Nike, and I was really hoping that this time when it broke out, that it would actually be a major push to new all-time highs. But what happened instead was it broke out and then it turned around and came back and hit my stop loss. So it's almost like it knew where my stop loss was. You know what I mean? You guys know how that is. We all been through that. It's like the market knows where the hell my stop loss is. But anyways, I'm out of Nike for now. And just waiting for this consolidation to finally clear up. You can see it's just been consolidating. So we're just waiting for this to clear up. So once we have a good candle, I'll check it again to see if there's another setup. Margot says JD. Oops. So JD is working on a nice inside bar here on the weekly. So let's keep our eyes on this and see if it closes as an inside bar. If it closes as an inside bar, this will be a great setup to take to the upside or to the downside here. But what I can see here is I have this fib drawn from a while ago, and we're just kind of hanging out in the fib zone, 786, 618. So we got to wait to see how it closes this week to take a trade. Rizwan UNH. Yep, so just another bullish week, very powerful. As long as this low can hold at 402, I think we just continue higher. So definitely looking good. Damon says Twitter. So what did I say last week about Twitter? We had this impulsive leg short. We pulled back to the 618 and we traded to the 272 extension. And I said, last week I said this exactly, guys. I said, when we get to the 272, when we get to this Fibonacci zone, look for a potential reversal. And you can see here, we already had bullish confirmation here. There are bulls in the market here. They're buying, right? That's what that little wick is. If it's going to last or not, I'm not sure, but the easy money was already made in Twitter for this little bounce. But if not, we have this completion down here at the 50%, around 48.56, which could potentially be the next area. So if it continues lower, look for here. If it continues higher, then the 272 might have been it. Matthew, GCM, what is this? Gold futures, are you talking about, Matt? This one? Yeah. So gold's been doing the same thing that we talked about for weeks now, right? If we draw the fib from this high to low, it found rejection around the 382 and it's just doing the same thing that it's always been doing, which is pretty much pulling into a fib, rejecting, pulling into a fib, rejecting. For the gold to turn around and really get bullish, it needs to break this level. It needs to break 1800. It needs to get around, turn around and break through it. But every time we come back and test a fib or we test the mid Bollinger Band, this thing just keeps turning around. So that's not a good sign for the bulls. But I would say as long as this level here, 1720, this zone can hold for the bulls, then they can keep building a base and then hopefully start to turn around and push through. Idalberto says NVIDIA. So I think NVIDIA has been bleeding a little bit, right? So actually one of my friends, we were talking about this setup last week, and just look at this, guys, right? So here we go. Double inside week on NVIDIA last week, double inside week, okay? Double. So 2 weeks of consolidation. All you had to do there was take the short below that second candle. That's easily double your money right there, okay? Easily double your money right there. You put a tight stop loss here, take this down, double your money. So NVIDIA was a great, great trade. Right now for NVIDIA, if we take the fib from the low to the high here, we can see exactly. So I posted this earlier on someone's Twitter channel. Someone, I don't know who I posted it on, but I was saying here, if we pull back in here, we have the 50% right here at 556.50s right over here. You see how the bulls already stepped in and purchased it here. So this is a good sign for the bulls, and they're looking to hold this for the rest of the week. Alex says pen. Pen, inside week last week, it already broke down. It broke down, and depending if you scalped it, you could have made a little bit of money, but now it's reversing again right on the 618, right? So this is actually a pretty bullish sign because we broke down to the short and now we're turning around. So if pen can break through 95.50 at some point, that will be extremely bullish. We'll have the Fibonacci and the false inside bar breakout supporting it. We have Blues Rock Addict from, so we have BC, Brunswick Corp. So this is very, very bullish at all-time highs. So whenever something is very bullish at all-time highs, what I like to do pretty much is just play the low of the weekly bar. So as long as 108.33 can hold, continue to just play this thing bullish. That's what I like to do. I like to play the bars. So silver is working on an inside week right now. So let's see if it closes like an inside week. If it closes like this would be a very good setup going into next week. Otherwise, it's just pretty much chopping around and just trapping people. So let's see if we can close with a inside week. Snap. So I was looking at Snap, but I didn't really get a setup with the inside bars. There are a lot of fib actions here. You can see initially we tagged the 50 and we popped up. Now we're tagging the 618 and holding. So there are these fibs that are supporting it. All of this here, 50, 618, 786, they're all supporting it. But if this level goes over here around $50, then Snap can definitely push back a lot lower. So the bulls need to start turning this thing around or it can get very, very nasty. Damon says, thanks. You're welcome. Matthew says, yes. Yep, we got yours. Tesla. Yeah, I just been hanging around with Tesla. Tesla had an inside bar close on Monday. So the play today was playing Tesla for the inside bar breakout, right? So just look at this, guys. This is all these free strategies I have on my channel. So please take some time to look at my strategies. So this is the inside bar from Monday. Tesla gaps down here. First 5-minute bar. You just take the opening range breakout. Boom, boom. You short that thing down. You make good money, guys. It's so simple. It's actually so simple. The problem is most people don't have a plan. Most people don't follow their plan. Those are the two issues. Either you don't have a plan or you don't follow the plan. That's literally the issue. If you have a plan, you follow it, you're good. Jim says Dell. So let's see Dell. So I just want to ask, out of everyone here today, how much of you are in my private swing room? If you're in my private swing room, let me know. I'm just trying to get some statistics and try to find ways to improve my stream and things like that. So here with the weekly, we have Dell, right? It's at all-time highs, but it's starting to pull back. So what I like to see whenever something's starting to pull back, I want to see this 20 EMA. I want to see this 20 EMA pull in and start acting as support. So let me show you an example. The last time Dell tagged the 20 EMA, it put in an inside bar at 64.30, and then we exploded to $103, almost double your money. This is the pattern I want to see. You see when the 20 EMA comes to be support, that's a good buy. So waiting for this thing to pull back, right? That's what I'll be looking at. So Andrea says Airbnb. Let's take a look. Froze on me. There we go. So with Airbnb, we're just looking at the bigger picture right now. We have the swing low to swing high. So you can see there are buying wicks in here. So there are algos in the 618 between the 50. They're just holding it here. So we need more information. We need to see how this week closes. But we can see there are buyers in here. It's not a bad shot here. Take a chance. Just know your risk and don't risk the house. Jeff says, can we go through some gappers for tomorrow? So Jeff, we don't know what's going to gap up until the morning, right? Because overnight, these stocks are going to be traded. Futures are going to be trading. It's going to gap the overall market up or down. So we don't know until maybe around 8:30, 9 o'clock. Then we can see which stocks are going to be gapping, right? Right now, we won't see it because the stocks are closed. The futures market is running. And then in the pre-market, when we open up, we can see which ones are gapping. All right. So we won't be able to make those decisions right now. So Blues Rock says, I'm in. Thank you for supporting me. Jeff says he's in. Thank you for supporting me. Michael's in. Thank you. Andrea in. Thank you. Okay. So, a good bit of the people that are in are joining. I want you guys, even if you're in the swing room, if you're using my day trading services or whatever, join these because I talk about a lot of things. Overall, you guys know my goal is to help humanity, whether it's through achieving financial freedom or just helping in general, my CPA knowledge with my whatever I can help, just helping. So make sure if you're in the room, you try to attend these because there's going to be different topics we talk about here. And, you know, just good to have a community of traders that we can help each other and rely on each other. If any of one of you guys succeed in here, I'm succeeding at the end of the day, because you're going to spread trading wars to the world. And that's what my goal is. All right. So we had a good 35-minute talk. The beginning, we focus on the opening range breakout. And to recap, the opening range breakout heavily depends on gapping and who's trapped at the open. And I'm just going to quickly talk about it for anyone that joined late. So what we can do here, guys, we can go to indicator. So there's the free opening range breakout indicator. Someone was so kind to create this. Chris333. No, not him. Sorry, this guy. Chris Moody. This guy. You know, does he have a Twitter? This guy have a Twitter? Maybe we should just thank this guy, man, for creating this. If this guy has Twitter, let me know. If you guys see it, let me see here if I can find it. So this guy created this, guys. No, he looks like a smart guy. Is this the guy? Is this the same guy? Same guy? Okay, this is 8 years ago. Yeah, I think it's the same guy. All right, so let's tweet at him. So thank you for creating the opening range breakout indicator on, let's just hit this Tradingview. It's great for new traders. All right, guys. How we spread the love. That's what we do out here. Spread the love. We're not negative. If somebody does a good job, we want to support them. All right. So what I was saying is, okay, opening range breakout, draw the previous day's low, draw the previous day's high. Ask yourself first, are we gapping up or down? Okay, we're gapping down. Anybody that bought yesterday is in trouble. Okay. Anybody that bought yesterday, as soon as we gap down, they're asking themselves, do I sell? What do I do? Do I cover? Do I double down? Do I cry? They don't know what to do. And as a professional trader, your job is to take advantage of that. Okay. So what you're going to do here is you're going to go in here and you're going to go hit indicator. You're going to say inside bar. What the hell am I typing here? Opening range breakout. You're going to do this one right here, Chris Moody. And then what you want to do is you want to go in here. You want to hit the adjustment and you want to make sure it's on the 5 minutes. So for me, I trade opening range breakout on the 5 minute. You can do it on any time frame that you like. So the first two yellow lines, this is the high and the low. So right here, it's saying, okay, it broke this low. That's why the color changes to red. So now you're going to short here. These are your first two targets according to the indicator. Okay. So you could just use that. It's very, very simple, guys. All right. Even if you don't use it, have it on your chart so you can learn. So pretty much what I would have done here, how I would do it, I don't use the indicator. All I do is here, just short below the low. Okay. Put the stop either above the high of the candle if you want to be safe, or come in on a fib, 618.50, whatever you want, right? And then from there, just take this bad boy down, right? And look at all that money you could have made. So scale out on the way down, get your stop loss to break even, and then take this for as long as it can take you, right? Scale out. If you have the courage to hold it till you get to the lows around 8R, you make $8,000 with $1,000 risk. If you risk 10,000, you make 80,000. Very simple. If you hit it 8 to 1 risk to reward, you can lose the next 7 trades and break even, right? So that's how we do it. We focus on risk to reward. We focus on good trades. We know when to use a strategy. Don't use the opening range breakout when we open inside the previous day and everything is choppy and consolidating. Don't do that. Okay? Because if you do that, you're going to lose. Okay? So just over time. I'm not saying I'm not 100% accurate with everything, guys, but I always look at statistics. I want to be right 70% of the time. I can't be right 100% of the time. Nobody can. But if I could be right between 60, 65, 70, if I could be up there, I'll be a millionaire, billionaire, right? Because that's all it takes in trading to make good money is a 50% win rate. All right? You don't need a 50% win rate, actually. Let's open up the book. Let's open up my Bible. Okay? Sure, I already have it here. So here's the win rate. Okay? If we're getting, so we went in that setup, let's say on average, we got about 4 to 1. So if we take that setup and other setups, and on average, we're getting about 4 to 1, then we only need to win 21 out of 100 trades in order to make a profit. So guys, that's not difficult at all. You can do it. Just put in the work, study, reach out to me if you need help. Come to my community, join the private room if you want to be a part of that, or if you want one-on-one coaching from me. I know Andrea recently reached out to me and I'm helping her, and it's going to be a great journey. And Delfino recently, I helped him. I don't think he's here today, but if just stick with the basics. We'll start with risk management. Okay. Take a picture of this chart, right? Or buy my book if you want to help me out, or just take a picture right here. Okay. I created this in Excel. Take a picture, screenshot, and I just want you to look at this chart and just understand that these are the buckets you need to be in over here. Okay. And I have a friend. I don't know if he's going to watch this, or maybe he's going to watch it, the recording, but his problem is he takes profit a lot quicker than like his losses. So for example, if he makes like 0.5 hour, 0.25 hour, he'll be out, because as soon as he sees the profit go green, it sends a signal to his brain that he needs to close the position, right? But sometimes if he's losing on a position, he'll be stubborn and not honor a stop loss, or he'll be double down, right? So in this case, his risk to reward is inverted. His risk to reward is like, for every loser, for every winner, he has 2 to 3 losers. His risk to reward is inverted. So if you ever have the urge to close a trade too early, always remember this chart. Okay? Always remember this. And the optimal way to take advantage of the chart is through scaling in and scaling out. Well, not really. You don't have to scale in, but the scaling out part is a must. If you're doing a strategy that requires scaling in, like Fibonacci, then use your scaling in as well. All right. So I'm very happy to see that we had about 25 people in here today. I really appreciate it. And I'm trying to do these 3 times a week. I'm going to try to do that. That's my goal. Tuesday, Thursday, Sunday, something along those lines, to help you guys out, share the knowledge, have built a community. And, feel free, guys, to share your trades. Some of you guys DM me with your trades and say, I made $1,000 or I did a Fibonacci, but feel free to share it when you come here. Share your trades with the community and we can look them over. It doesn't matter if it's a winner or a loser. We can all improve and help each other out. So that's my challenge to you guys. The next time we come here, not only are we going to do chart requests, I want you guys to bring one trade that you took and just say, hey, this is the time, this is the date, this is the entry, exit, and the stop loss. And we will look through it together as a team and we will help each other get better. Okay? It takes a community to build. What's the saying? It takes a family to build a community. Something like that. Something like that, right? That's what I'm trying to say. We need to help each other out so that we can all succeed. Rizwan says, I trade ATVI after hours. I don't trade anything after hours, Rizwan. I think after hours is more of a gamble than a strategy, in my opinion. So it takes a village to build a community. There we go. That's what I was looking for. Thank you, Marco. All right, I'm done. Thank you. Stay tuned for the tweets this week. I'm going to post the top picks for tomorrow. And appreciate you all being here. And I hope you learned something about the opening range breakout. Check out my video on YouTube if you want more details. And if you have any questions, always feel free to DM me. All right. Thank you, guys. Take care.